morning. Ira Epstein with your Morning Flash Update. And this update is for the morning of Monday, the 13th of March, 2023, 8:15 a.m. Central Time. And what a crazy markets we're dealing with. Huge break in the stock market. This is a bounce. 10 minutes ago, it's 8:15. You were down 400 points. You've just bounced a little bit. You started off way up here. You have an 800-point swing in the Dow. You have a 130-point swing in the S&P. The NASDAQ is looking at a swing of approximately 400 points. And if you think this isn't crazy, it is. Then you're looking at metals. People are running to the metals markets. The silver is getting its short covering finally. It's not a precious metal, but it's an unwind. Copper's down sharply, and this is a bounce off the lows. It was down 10 cents, and that's because China ended its party Congress and did absolutely nothing to help the property sector from my point of view, and obviously from others' point of view. The dollar getting hit today hard. Now, people are lined up outside of banks across America. They want to pull deposits out of banks that are in trouble. And there's a slew of them. Even Schwab is down nearly 30% as we're talking in the marketplace. You've got First Republic down 65% right now. You saw that there had to be two rescues. Moments ago at 8 o'clock Central Time, the president came out and fired the head of the SVB, the Signature Bank, anything being taken over properly, so getting rid of the heads of those banks. He did it himself. He said they are gone. So where are we in all this? Well, let's understand, and then we'll come back to the markets. The FDIC said it will resolve SVB, and by the way, that's Signature Bank as well, in a way that fully protects all depositors. All depositors will have access to their funds this morning. You're going to see tonight on the national news, people lined up outside of these banks with their chairs. They've been there all night getting their money, getting cashier's checks, getting whatever, moving their funds to other banks. Their dilemma is this. The overwhelming amount of new accounts that have to be opened at the other banks, they're not staffed for it. I know this can be a problem. I have been, if you will, in a brokerage companies, stock and futures, where you get a rush of business and you're just not equipped for it because some event happened. It could be another firm failing. It can be whatever the event is. In this case, it's people petrified about their money. They don't care if they get paid the interest on their deposit. They want their principal protected, then they'll go shopping for that. The Fed announced a new bank term funding program that's 1-year loans. It's got $25 billion behind it. I don't know if that's enough money or not. They relaxed terms for lending through its discount window. So you bring in your face value, and let's assume it's $10,000, but market value might be $9,000. Doesn't matter. They're going to give you the loan based on $10,000 in order to make the system work. Will that last long? No. No losses associated with the resolution of Silicon Valley Bank or others at this point in time will be borne by the U.S. taxpayer. That leads me to problems. The bank stocks and values will be wiped out. So if you're with Signature, if you're with SVB and you own stocks or bonds, they're at zero value. Once they're taken over, they're gone. They're not coming back. Any losses to the deposit insurance fund, and there could be, they're going to be borne by a special assessment on banks as required by law. So you got to ask yourself, has the U.S. made banks utilities? Are they going to guarantee all the accounts? Forget the $250,000 for amounts that are much greater, because that's the danger of what just happened. Next thing that happened today, just last week, we had a 60+% chance of a 50 basis point hike. You now have almost that flip to no interest rate hike. You have fallen in short order, basically 48 hours of business, from over 5% on a 2-year, you hear what I'm saying, to just barely over 4%, a full point swing. Wow. In no time at all. You know, certainly it's happened in a 24-hour period. The full point maybe a couple of days, but that's about it. Now, what does that do for the Fed? You could get a red-hot CPI number tomorrow. That's when the report comes out. Does the Fed dare go 50 basis points? Forget that. That isn't going to happen. Could they go 25? They could. There'll be a small percentage. Most people will think they'll do a pause to let the banking system breathe and then go back to attacking inflation. In other words, keep the patient alive. Don't give too much medicine where they die from the treatment. Then, as the patient has a little more strength, go back after the inflation scenario. They cannot give up on the inflation scenario. Did the Fed break the system? Yes. The Fed broke the system. Interest rates are what did this, all right? Were these banks mismanaged? Yes. The banks that are in trouble were mismanaged. They're niche banks. They didn't protect themselves, that the face value of what they were borrowing with could fall in value, that investors could ask for their money back, and they didn't hedge it in some manner to protect it. Should that management be fired? 100% yes. Got it? Will they face consequence? If they own stocks in it, they've already faced the consequence. Will there be other bank failures? Yes. There are going to be other bank failures, in my opinion, but not as many as there might have been without the actions of this new program that was put out. That's the important thing. So when you look at other markets, everybody's scared. They don't know where to go with things. That is the problem that you're getting. So you're getting bids, be it a Bitcoin, safe haven in people's mind. You're getting bids in the gold market. You're getting bids in the Treasury market. But everything else, the U.S. dollar, how bad is our system? So that's giving bids to foreign currencies. I don't think there's anything wrong with the U.S. system. So I think these bids are misplaced. However, there is a top in place in the dollar. That's what I really think is going on. And the market is feeling that top right now. So you've got to be careful of where you want to be. And what should you do at this time? Well, I pray that what you want to do is see how I handle things for my clients. Because when you look at what I write during the day, when you look at what the trades I recommend, how I recommend them, how I avoid trying to get caught into these things. And by the way, at this point, I'm not. This is how you get it. A free offer to my trial. And we are talking both my written updates, twice daily, special updates, my morning videos. Let me put them with you. This is the time you want to look at it. You want to look at it when things are bad and hear a voice that's done this for 50 years, been around the horn, seen exactly this before. This isn't unique. I've been through bank failures before. I see what they do. I see how the Fed acts. I see what the president does with his conversations. I see how the Fed has to back off, but they're not going away. Inflation will not die because of this. It can be wobbled. Why? Because banks, if you go today for a new loan to your bank and you say, hey, John, I'd like to get $10 million to do such and such, your banker's probably going to say, you know, this isn't the best time for me to present it to our lending board. I think we wait, let things die down, and why don't we talk in another month or so? That's the things that will happen logically. What else will happen? If you're in business, you want to get away from one of these regional banks and get lines of credit set up, irrevocable ones if you can, that are set so you can do your business with the big boys. Is this going to force the big boys to offer more for deposits? That deposit war that some thought was coming is now in abeyance. Why? You just want to be able to get to that bank and have your deposit. You don't want them to turn you away. It makes sense. So to get my information, just go to our website under free offers. You can click up here at any point. That'll take you there. I'm Ira Epstein. Be careful today.